All right, everybody, Stocks by the Numbers, welcome back. And we had some earnings today. We had GameStop Corporation come out not too long ago today after market close. As you see, GameStop, ticker symbol GME, here on the New York Stock Exchange. Company closed up about 2.5% here. A little optimism maybe coming in, some volume coming in here, people trying to trade these earnings. And as we see, it kind of headed in the opposite direction. Stock currently down about almost 15% here, sitting at about 13.20 now, was down to about 12 and a half, had a little bit of a bounce and a rally. But basically what I was saying was, in my opinion, what they were doing is they're trying to increase the profitability side and the EPS side so that they can make themselves more profitable, but at the same time, they're losing market share and the revenue is consistently decreasing. And even a quarter like this, as you see, estimates of 2.05 billion, the company misses by over $250 million, almost 12.5%, posting 1.794 billion. So now we were talking about how this estimate of 2.05 billion is about 10% lower than what the company posted this time the year prior. They posted about 2.25 billion. Now you can see estimates were down to 2.05 billion. So everyone was expecting a 10% drop year over year in revenue, which in my opinion is a big red flag. I mean, losing, a couple of percentage points, whatever, you lost a client to a competitor or something like that. We know how business works. But to have an expected drop like that, 10% decline in revenue year over year, in my opinion, is a big red flag. And then on top of it, what does the company actually post? The company posts less than 1.8 billion, missing by 12.5%. Because again, trying to focus, in my opinion, more on the profitability side. And I just have to say, in my opinion, from an outsider looking in, I'm sure if you're there at the company, looking at the numbers, looking at how everything operates, I can appreciate the fact that it's probably, harder when you're there and it's much easier from the outside looking in. We all heard that before. But I still say, in my opinion, there is nothing proprietary about this company. And I know we looked at the website several months back, and I know that I think like the pop dolls, but honestly, I didn't even dig deep into it. So I don't even know, like, is that their thing? I honestly don't even know. But anyway, more importantly, we know it's about the video games, right? And what my thinking was is that we have the shift from physical to digital, right? And we can buy games directly through the console. You can buy games, as I mentioned, through third-party platforms, programs like Steam, right? So we have other ways to buy games. We no longer have to go to GameStop, right? So this is essentially Funko Land, right? I mean, this is a broader scale Funko Land. If you guys remember, I know that's a throwback name. I don't know, all you young guys might not be familiar with Funko Land, but essentially it's the same thing, right? There's a place that sells video games, and it used to have to kind of be its own standalone store. And now you can kind of get all of these products from other places, right? All of these other larger retailers like your Walmarts, your Targets, and over at Best Buy, right? All of these places sell electronics. So even though they may have cited like, oh, we saw a rise in our hardware sales, it's like, yeah, like people could go to GameStop and buy a Switch, but at the end of the day, they don't have to. And that's the point I'm trying to make. And listen, you're talking to a gamer here. I always loved games. I was always into games. So I appreciate the appeal of going to GameStop, having that experience, being in that atmosphere. Believe me, I completely appreciate it. But again, at the end of the day, there's not necessarily a main reason as to why I have to go to GameStop, and I can probably get whatever I was going to get there, I can get it somewhere else. And now at this point in the business cycle, in the business life, I'll say, of GameStop, I can probably get it for a more attractive price somewhere else as well. Now, I know they buy your used games and stuff like that, but again, I mean, if you really wanted to, there are other outlets to do that too, right? I mean, if you really wanted to sell a game, you could probably just list it on eBay or something. So we have other outlets for that. And this is why I was saying, in my opinion, they need to develop something proprietary. And that's why I was talking about potentially uh, some sort of like their own game developer if they can. so that it has to be released at GameStop. I'm sure developing their own like system is probably out of reach, but it's a point, in my opinion, to where if you're in the business itself, as I said, it must be very difficult to try to turn this around, because no one's going to give you a break, right? Because we know how popular and how much revenue comes out of the gaming industry as a whole. So if you really think about it, a lot of these other companies don't necessarily need GameStop, right? Meaning that if supposedly like a deal was made somewhere where GameStop could tell them like I don't know, hypothetically like oh, give us like a 10-20% break on the cost from you directly, and in turn uh like I don't know, we'll give the customers like a discount and try to pair it with like some of your other accessories maybe to go with the console or something. I mean, obviously I'm thinking outside the box, and chances are that probably wouldn't work and wouldn't even happen, but I'm sure you can appreciate what I'm saying. And what we're seeing here in real time are, people speak with their dollars. And what we're seeing here in real time is that people are essentially saying, I don't really need to go to GameStop. And that's why, again, even with that 10% drop year over year in those estimates, for them to not only if they reported that number, like I said, in my opinion, that would be a red flag because it's declining revenue. But on top of it, they miss by 256 million. I mean, I just don't see anything positive that could come out of this. And as I mentioned, they closed a couple of locations, they laid off some workers, so they tried to beef up the EPS side. And as we see, they missed by over 25% on the EPS side, missing by about 7.5 cents, posting 22 cents on estimates of 29.5 cents. So the stock took a big hit here. And if we check on stock charts here, you can see that on the daily, you can see the bottom Bollinger Band down there, 1314, and the stock right now 1332 did bounce off that level, but you can see it was basically riding flat at about that 13 level. I can't tell what the low was. It was right here, low 1255 it looks like. So it dropped far and then had that bounce. Let's check if that was a pivot point. No, 1318 broke through that to 1255, almost went down to that other support level there of 1210. But yeah, I mean, in my opinion, as we see it, we had the run up and then we've kind of been stepping down. So that's why I think that obviously it's probably going to open down here in the red, and chances are it'll probably continue down into the 12s, because that is a very disappointing quarter in my opinion. Next support level on the weekly is 1035, and also if we back out of this range that we've been in, again, this is going back, it's from that high January 25th 21, and we can see that the bottom of this range, if we were to come straight down, let's just say hypothetically over the next week or so, you can see the bottom of this range is about 960. And we hit, what, 1255, so this is the 1 year, by the way. So this fib here, 1264, so we had a breakthrough, and then we kind of started to bounce off of that. But this is why I'm saying, in my opinion, even if they run it back up to like 14 and kind of trying to regain some of that drop, it'll probably come back down to retest and end up breaking, you understand? And in my opinion, and come back down here into the 12s and potentially the 11s. So I have a feeling that we could see as low as maybe 11 to even $10 before we roll into next quarter's earnings, which apparently the revenue dropping to a little over 1 billion and expecting a loss back here. But they try to speak positively about it. See, like right here, GameStop turns a full year profit, its first in years. It's like, yeah, that's awesome, right? I mean, that's awesome. That's a good sign. But also at the end of the day, what do you have to do it? And that is what I think is the issue here in the longer term. And that's why I was speaking and have been speaking so much, just in my opinion, just saying that the company needs to do something proprietary. There needs to be some sort of exclusivity to GameStop. And that, I think, is what they're missing here. Is what they're missing. And like I said, we're seeing the shift from the actual, physical games to the more digital platform, and almost reminds you of something like a Blockbuster trying to, stay in business and compete with a Netflix who is up and coming. And that's what I mean. It's like they say, adapt or die, and that's the problem. That's what I think this company has to do. I think they have to figure out a way, even if it really sucks in the immediate short term, and the stock may take a massive hit inside of the next 12, 18 months, however long it may take to find the bottom and turn it around. In my opinion, if they really want to keep this company afloat, they have to make some serious changes, and they have to start to adapt to what sector they're in, because I just think they're behind the curve here. And the meme only lasts for so long, and there was the big squeeze, and everyone covered, and that's what I mean. That's why I'm saying, in my opinion, it's for a lot of Wall Streeters out there, chances are, in their mind, in my opinion, it's probably back to business as usual, which is let's look at companies that we quote unquote know or have very high conviction are going to consistently keep dwindling away and potentially fail one day. And if you recall, if you've been with me for a long time, I did a video on Bed Bath and Beyond, if you remember, a while back. But I remember I did the video on Bed Bath and Beyond and basically said the same thing, right? They sell everyone else's stuff. They have competitors. There are other places to go. You don't have to go to Bed Bath and Beyond. And the stock's probably going to keep dropping, and the numbers have been going down. So yeah, I'd stay away from Bed Bath and Beyond. That was just my opinion. But then what happened? I think it was like just a couple of days later or something. Someone comments like, "Oh, they went bankrupt. They went out of business." And it's like, if you can see the writing on the wall and you have an investment vehicle available to take advantage of this conviction and of this confidence, then you're probably going to go for it. Which is why, again, I remind you all as to why GameStop was so heavily shorted to begin with. But you can see, yep, video game retail, original meme stock missed, top and bottom line. Reported net income of 63 million, 21 cents a share, compared with net income of 48.2 million or 16 cents a share in the prior year's quarter. Okay. Okay, earned 22 cents. Analysts expecting 30. I really can't believe they missed revenue by such a big chunk. And remember also, that was Q4. Remember that also. That was holiday season, their best quarter, right? And what were the reports were saying? Oh, there's an extra week in there too in this cycle for them. So right, and even with that extra week and the holiday cycle, they missed by 256 million or whatever it was. But the company exited the quarter with cash equivalents of about 1.2 billion, compared with 1.21 billion at the end prior quarter. Okay, in my opinion, that's not really a big deal, but I just I'm not exactly sure what they're planning to do with this cash. And again, I know we said, oh, the CEO apparently is able to invest this cash in stocks or whatever. So, I mean, like they can try to play financial advisor to make money on the finance end, but in the end, that's probably just going to supplement the dwindling revenue coming from the actual business itself. So, I'm not even sure if that would work out, which again is why I'm saying maybe they should start gobbling up some other smaller companies and try to gain more IP and try to just gain some necessity for the consumer to have to go to your locations, in my opinion. As of February 3rd, GameStop had a total of 4,169 stores, down from 4,413 on January 28th, 2023. So, what's that, like 70%? Not hosting a conference call. Ryan Cohen eyes equity investment. Here we go. So this guy's going to try to play day trader. I have no idea what's going on right now. The company saw major leadership changes last year. Okay. Also approved a new investment policy. Yeah, I don't, like I said, I don't know. I don't know. Unless we're literally going to see a situation where Ryan Cohen invests into just a handful of top tech stocks to try to, gain and to try to gain profits off of this rise while the company is falling. I just don't know. In my opinion, it's really not adding up. Revenue fell 19.4%. That's wild, man. See, that's what I mean. In my opinion, they're trying to keep it afloat on the EPS side, but okay, reported first annual profit in several years. Cost-cutting efforts. Said net income was 6 million. Compared with the net loss of 313 million. Yeah, that's a big difference. Net sales declined 11% to 5.273 billion. As many customers have shifted to downloading games. Right? This is what we were talking about. This is what we were talking about. If a new game comes out right now and I can just download it, no matter where it's from, if I can just download it, what am I really going to go to GameStop for? And like I said, I understand it's the experience. You go in, you want to look at something, you want to test out a game, maybe if they have it over there, right, on the testing station or whatever. I don't even know if they still have those. I haven't been to a GameStop in years. But you understand my point. I understand the atmosphere and the experience of it. But also, once you go there and do that, chances are you probably don't end up spending big coin in a GameStop location. And that's what's hurting the business. So, I mean, obviously there are probably an endless amount of changes or, acquisitions they can make of other companies to try to bring them in to try to help turn the whole experience and the whole store around. And, of course it is possible, but it's up to them. It's up to them right now. And again, I don't know if Ryan Cohen investing into stocks is going to be the answer. I mean, and again, I'm not trying to bash anyone's ability to make money in the market. I mean, obviously, I wish him the best of luck. But, we're technically we're talking about running a business here. Oh man, what a dismal quarter for GameStop. And like I said, people, I just hope anyone who initially bought in obviously got out. That's what I really hope. Because anyone who's really holding for the long run, expecting some massive explosion again, in my opinion, I am not seeing it. I am really not seeing it. And if this company becomes the number one short of the week and the year and the decade all over again, in my opinion, it would be justified. I think GameStop Corporation, GME, is dealing with some serious issues here. And we may see single digits. We may see single digits here in the next month or two, in my opinion. But yeah, GME, I had a feeling. I had a feeling that it, even if somehow like we were saying, the EPS number might have beaten. Like I just had a feeling that this big drop in revenue. I think that Wall Street knew what was coming. And again, it was 2.25 billion. Estimates were down here at 2.05 billion. That's a 10% drop. Then they miss by another 250 million, right? So technically sales declined by 500 million. You understand? Year over year. But yeah, bad news bears right there. GME down about 15%. And I'll end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, be sure to leave them down in the comments section. I'm usually very quick to reply. If you stepped in on GME and, whether you played calls or puts or you have shares or whatever, let us know what's going on, what your experience is. And if you were involved, are you looking to sell immediately? You know, are you potentially averaging down? Like, you know, how would you play it? Because I'm sure there are a lot of people who are probably still involved with this one and may not really understand what they should do or how they should play it. So that's why the comment section is awesome. But yeah, that's it. Like the video, thumbs up, algorithm, and of course subscribe to the channel. That's our handshake agreement. That's how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. You guys have a good day.